Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me are Ritu Singh and Shruti Mishra. These are the top headlines from the startup world. Quick commerce startup Zepto raises $665 million as it gears up for an IPO. The fundraising values Zepto at $3.6 billion, almost triple its valuation a year ago.
Fintech player Pine Labs is considering raising about $1 billion in an initial public offering in India, as per a report by Bloomberg. The company may seek a valuation of more than $6 billion in its IPO.
Nirvana.ai, an AI design tool, secures significant seed funding at a valuation exceeding 100 crore rupees from a Canadian company and H&I family offices. The company will use fresh capital to expand into newer markets.
Homegrown venture firm Venture Highway to merge with General Catalyst as the US-based VC seeks to deepen its presence in India. General Catalyst plans to invest $500 million to $1 billion in India in the next few years.
Indian tech startups raised a total of $4.1 billion in H1 2024, 4% higher than H2 of 2023, according to a report by Traction. Late-stage funding rose to $2.4 billion, marking a 3.8% increase from H2 2023, as the first half of 2024 witnessed 8 funding rounds surpassing $100 million.
I think this is the decade of India and the century for India. India will become the largest economy in the world.
John Chambers expects India to become the largest economy in the world this century. The chairman of US-India Strategic India Partnership Forum says this decade and this century belongs to India. That's an exclusive.
Amazon is planning a major revamp of money-losing Alexa service to include a conversational generative AI with 2 tiers of service, and has considered a monthly fee of around $5 to access the superior version, says Reuters.
Well, those were the headlines we've been tracking for you this evening. Our top story today: quick commerce platform Zepto has raised $665 million at a $3.6 billion valuation in a highly oversubscribed round. Just 9 months after the company raised $235 million at a $1.4 billion valuation, Avenir, Lightspeed and Navra Capital joined the company's cap table as new investors. Among others, existing investors Gladebrook, Nexus and Stepstone co-led the round, with Goodwater and Lackey Groom doubling down as well. To talk to us about the road ahead, joining me now is Zepto's co-founder and CEO, Adit Palicha. Adit, welcome to Startup Street. Now, the Series F funding comes at a time when the company has achieved near EBITDA positivity, with 140% year-on-year growth on a base of $1 billion in annualized GMV. About 75% of your stores are fully EBITDA positive. How have you achieved this? What has led to this growth?
Yeah, firstly, it's wonderful being here. Thanks for having me. In terms of what's driven this growth, I think we've been in a position where we've been able to successfully raise the organic rate of new customer acquisition. I mean, we've been able to scale new customer acquisition from 3 lakh new customers a month to now about well over 6 lakh new customers a month. So that addition still primarily driven through organic means, with obviously some supplement from paid marketing, but that's been one big driver of success, right? New customer acquisition. And we've seen that drive not just overall platform growth, but same store sales growth within our existing network of dark stores. We've been able to drive orders per day up from around 1,000 orders per day to now 50 to 70% higher, right, on just purely same store sales growth. So that's been the progress over the past 7 months on volume. On top of that, I think all the other initiatives we've done to drive user retention and frequency, for example, Zepto Pass, which now has almost 5 million subscribers across the country. All of those initiatives have really played out well and improved retention, and has been sort of a catalyst to growth over the past 7 months. So that's the reason why we've been able to multiply the business over the past 7-8 months from the last fundraise to today.
Speaking of the last fundraise, you raised $235 million in your Series E round in August, I believe. 9 months ago, significant capital raised. What made you raise another round so soon, and where will the fresh funds be deployed, Adit?
So, from our perspective, we saw this round as an opportunity to build the balance sheet. We're now pretty close to, overall EBITDA break even, like you mentioned, right? 75% of our stores are fully profitable and they're turning profitable faster and faster. They used to take about 23 months to turn profitable. Now they're only taking about 6 months with a fraction of the capital and fraction of the investment to get to the same scale and same level of profitability. And so, from our perspective, we have enough profitability being generated from our mature stores to keep reinvesting back in the business and continue to grow. But we looked at this round, given the investor demand, as an opportunity to build our balance sheet into what will hopefully be a large IPO in the relative near term. And so, we think of this as having the requisite amount of cash we need to be able to justify a multi-billion-dollar IPO. So this is a balance sheet building exercise. We're not in the game of taking a large amount of capital and just spending it.
Like you just mentioned, you're going public, which seems closer than before. How close are they? Can you give us a timeline?
So look, we're definitely trying to build out all the infrastructure we need to be a public ready company. First, even on the commercial side, right? What we've done in terms of proving to investors that we can operate at EBITDA break even or around that level, even while continuing to grow the business. That's obviously one big milestone that you need to have to be a public ready company. But then beyond that, we also have all the infrastructure on reporting rigor, accounting excellence, on corporate governance mechanics, on all the long-term compliance thresholds we want to hit. All of that is deeply underway right now from our own internal work perspective. And so it is a big priority, and we are trying to push for an IPO as soon as possible. And the ambition is sooner rather than later, like I mentioned. So hopefully it's within 2025, and we should have all the infrastructure ready to go public by then.
It'll be within 2025. Aditya, you're also looking to expand the Zepto Pass. Can you tell us how many people have bought it already, and how much is it contributing to Zepto's revenue?
Yeah, so 70% of orders are coming from Zepto Pass today, and it's almost 5 million subscribers across the country.
So you're saying 70% orders are coming from the Zepto Pass currently. We spoke about, you guys looking at providing a 10x customer experience, expanding the Zepto Pass, and of course, launching new categories. That's also the plan. So what are these new categories, Adit, and how soon do you plan to launch them?
There are categories that we already are starting to, bubble up into. For example, beauty and cosmetics, home and kitchen, toys, other general merchandise items, even low-ticket appliances and electronics, like day-to-day household appliances. All of those categories are on the horizon. We've already expanded into all of them today on the app, but we're planning to meaningfully double down into them because we're already seeing, these categories will probably hit, they were just launched last quarter. They'll probably hit a 100 million revenue run rate, by next quarter, realistically, the way that it's growing right now.
Let's now talk about competition. How do you plan to compete with the likes of Tata's Big Basket, Zomato's Blinkit, who have deep pockets? In fact, we now have RIL entering the quick commerce space with JioMart. How do you plan to compete with the big boys?
Look, I think this is primarily an execution game. We're talking about what will most likely be the largest market opportunity in Internet India to date. Quite realistically, I mean, this category is bigger than all the other categories that Amazon and Flipkart serve combined ×2, right? Grocery is the mother of all categories. And so the market is extremely large, but the business is very difficult. It's operationally intensive. The mechanics on unit economics are tough to crack. And so it's very much an execution intensive game. I think any player that executes extremely well will be able to build a successful large company in this space. I think if 3 players execute well, there'll be 3 large companies built in this space. If only 2 players execute well, then only 2 players will succeed in building a large company. And if only 1 executes, then only 1 large company will be built. So it's all about execution.
All right, Adit. With that, we'll have to wrap up our conversation. But thank you so much for joining us today. And we wish you the very best with all your aggressive growth plans. Thank you so much.
My pleasure. Wonderful being here.
So it's all about Zepto's fundraising. But moving on, iFinance has raised $30 million in debt funding from FMO, the Dutch Entrepreneurial Development Bank, The proceedings from this funding, around 250 crore rupees in local currency, will be used to further ICE's mission of financial inclusion by extending loans to underserved micro, small and medium enterprises across India. Joining me now to discuss the fund allocation plan and its growth blueprint is Sanjay Sharma, the co-founder of iFinance. Sanjay, it's great to have you back on the show with us on Startup Street. First, let's take a look at the numbers that you've reported, right? iFinance reported its profit after tax of 161 crore rupees versus 57 crore rupees in the previous fiscal. You also saw a big jump in your revenues of 67% for FY24. If you could elaborate on what led to this big growth in profits, what's working for the company, and where do you hope to close this year? How is the quarter growth looking like?
Sure. Thank you for having me on the show, and good evening. Last year has been a wonderful year, and I think we have moved very actively forward in our mission to provide funding to unorganized micro enterprises and therefore create employment opportunities across India in the hinterlands of India or Bharat. Last year has been a wonderful year because a lot of things that we have done on automation, in moving costs down, getting our unit economics to work better, have worked for us, and that's the reason that our revenue has grown almost 67% over the year, and it has become 1,070 crores of revenue. And of that, the profit has been about 161 crores. These are great numbers, and I think the money that we have raised recently from FMO, the Dutch finance institution, of 30 million or 250 crores, and we also raised some equity sometime back in November, December, which was another 37 million, and about 310 crores. These are funds that will go straight away into deployment for growth. We continue to grow rapidly. There's a lot of demand in the market, and I think the coming year will see us improve our profits further and improve our unit dynamics a lot more.
Right. So you'll see your profits only improve going forward. But, iFinance's assets under management increased 4,004 crore rupees from 2,700 crore rupees in FY23. You've also managed to keep your net NPA under 1%, right? So how many loans did you disperse, and what kind of loan book growth target do you have for FY25? Are there any pockets where you're seeing stronger credit demand?
Sure. I think we have an active base of about 480,000 customers or loans. And since our inception 10 years back, we have given loans to more than 9 lakh customers. We have disbursed close to 10,000 crores during this period. So there's a fair amount of funds that we have channeled to the excluded micro enterprises. And I think we continue to do a fair amount of business. We do almost close to 40,000 loans in a single month across the 22 states that we are present in. So our presence is across India. And this business will continue to grow that way because there's a very large unmet demand from micro enterprises across India. And this is a segment that provides employment to a majority of non-agricultural positions. So I believe that this is something that we'll see evolve further in the next 5 to 10 years.
Sure. And, you just recently raised funds in December, and now you've raised about $30 million in debt funding. So this is, your second fundraise in 6 months, right? So why did you need these funds? Where will the funds go primarily?
Yeah, I think it's the growth in our portfolio. And you mentioned that from 2,700 crores, we have taken our portfolio to 4,500 crores today. And by the end of the year, we will be talking of close to 6,500 crores. So we are going to build another 2,000 crores further from here. And this 250 crores of debt and the 310 crores of equity that we raise are parts of that funding of our growth. So we will be raising more debt as the year progresses. That's the plan.
All right. So you will be raising more debt as the year progresses. Sanjay, we're completely out of time, but thank you so much for taking time out and being on our show here today.
Thank you very much.
Okay, we have to take a short break on that note, but on the other side, POP has received a note from NPCI for a third-party application provider license and secured $2.4 million in a seed funding round. We'll get you all of the details on that and more when we return after this short break. Welcome back. You're watching Startup Street. Now, fintech startup POP has raised $2.4 million in a seed funding round led by India Quotient and a few other angel investors. It also announced that it has received approval as a third-party application provider from the NPCI to offer UPI payments through its POP Club app. The company has built its UPI stack in partnership with financial firms like Yes Bank and JustPay. For more on how POP is going to use these funds and its UPI play, I am now joined by Bhargav Virangi, who's the founder and CEO of the company. Bhargav, welcome to Startup Street and thanks very much for your time here. Congratulations on getting that TPAP license from NPCI. Just start by telling us about this $2.4 million funding, how you're going to use it to expedite the implementation of various initiatives, which we understand includes the POP UPI service.
Thank you so much for having me here, first of all. We are a young startup, so I just want to introduce what POP does, right? POP is basically an e-commerce enabler startup. It's been a year we started the journey, and so the NPCI and TPAP license is sort of obtained to further or accelerate our vision towards enabling more online-first brands and solving their customer acquisition and retention problems.
All right. And how do you plan to exactly deploy this money that you've raised?
So the money we raised is our first seed round. The plan is twofold. Basically, we want to improve our team from a technology and a product perspective. So we want to hire more engineers, improve our payments infrastructure, make the technology more sound and better. And also we want to deploy some of the monies into building our brand side of the story, bring more brands onto the platform, which will be benefited with this whole payments and rewards play that we are trying to build.
Sure, but can you give us a little more color on this UPI play? Because, this is a space that is very heavily dominated by a handful of 2-3 players that have more than 90% of the market. What's going to be your strategy to make a dent in this, apart from, of course, the Popcoin reward incentive you're offering? And what sort of revenue growth are you eyeing from this part of the business given the zero MDR regime?
So I think the way to look at it is that we are an e-commerce enablement company, right? The Popcoin currency is used by hundreds of brands today, and customers who go and buy from these brand.coms earn this currency, and they get to redeem that currency on the brand.coms, right? So, so the way we look at UPI and how TPAP will accelerate this journey for us is that TPAP will accelerate the issuance of these POP coins through our marketplace app we just launched. So as a customer, if you go to a brand.com and you're earning coins once every 2 months or 3 months and redeeming that on the brands, UPI is a much more frequent play. So you can earn POP coins on a daily basis using a TPAP license, right? So hence your wallet share as a customer of POP coins will be much more farther accelerated with the help of UPI. That's the main problem statement that we're trying to solve with UPI into play. And to your question around there's so many players already and 90% of market share is that, so ultimately these companies have started like almost 7-8 years ago and they have their own play. They've built large distribution networks already and leveraging that distribution network to sort of sell, cross-sell financial services. But our focus will be on this value back in terms of POP coins to sort of give the right set of customers, let's say a millennial Gen Z customers, the kind of rewards they would look for. So we have tailored the UPI offering that we have made towards Gen Zs and millennials.
Okay, so you're banking heavily on those POP coins and the incentive there, but I know it's early days still since your launch in last year. What is the current revenue you're clocking, and how's profitability shaping up?
So profitability is a bit early to sort of comment on, right? So we are only a 1-year-old startup, and we're just still figuring out our product market fit. And from a brand's perspective, we have close to 500+ brands onboarded on the marketplace. The way we make revenue is for every sale that happens on the marketplace, we get a take rate, we get a commission back. So that's the revenue model. Again, it's too early to comment on the revenue numbers and profitability numbers. We're just starting out our journey.
All right. You said you have about 500 brands. How many more are you looking to add to the network? And you also claim that about 4 million customers have used POP coins.
Yes. So the network that we've built in the last 1 year has close to about 4 million in size. And we have, like I said, we have about 500 brands that are onboarded. The ambition is to sort of increase that brand pool to 15 to 1,500 to 2,000 by mid next year. So let's say a year from now. That's the vision we have. So the idea is to increase the choices for our customers to redeem points on. That's the only customer value proposition that we are driving, right, through the UPI app. So hence, the larger the brand spread, the better the customer value proposition is. So the ambition is to sort of get to about a couple of thousand brands by mid next year.
All right, and we wish you the best with that. Thank you very much, Bhargav, for joining us here on Startup Street.
Thank you so much.
All right, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching. More news and updates will continue on the other side, and we're going to leave you with all of the funding action for the week.